Ladies and gentlemen, Keikin here. Welcome to the weekly update. Hope you guys had a good day trading, or hope you guys are having a good day trading today. Keep in mind, I'm recording this intraday. As I record this video, market should be open for another 5 hours or so. So, things can change by the time you watch this video. But as I record this video, market is up about 0.7% there. On the S&P, looks like Nasdaq is up about 1.5. I got some guys here, a little slightly green, a little bit red. Transport's down, bank, energy's down. Biotech is making a move so far. Healthcare, home builders are down, up. Utilities down, retail's down. Bitcoin is up about 5%. Gold, silver miners are not. We're gonna talk about gold, silver miners today, or gold today. They're not able to get above that resistance, dollar down, and some of these other guys slightly green there. So I'm gonna make it up for you guys because I know I missed the video yesterday. My poker game went much longer than I anticipated. Yes, I lost money and that I got frustrated and I kept staying in. It's kind of interesting because when you're trading, sometimes when you're in a hole, you just want to bring it back, and so it gets just that much more difficult sometimes to come out of that hole. But anyway, so today in this video, so basically, since I missed the video on the for yesterday, so we're gonna do the 65-minute chart, as you can see here, and then we're gonna flip over and we're gonna be looking at Spider and Qs and the gold and Bitcoin for our usual weekly update, long-term analysis. So we're gonna do the combo video. It is all coming up right now. All right, so again, I'm recording this intraday. You're gonna see some rapid flashing lights on your lap. Market should be open for another 5 hours. Keep that in mind. But I just so, because I don't know how the market is gonna close, just based on what we see right now, and something we've been talking about this entire week is a follow through. You don't see a follow through, and we've been talking about tunas, right? Follow through and tunas, right? So because we needed follow throughs, and because we're going against the stream, like tunas going against the stream, jumping over, they cannot lose that footing. They cannot lose that momentum. So you see what happened here. We had some momentum built right here. I told you guys we need to see a follow through. And tunas lost this footing here. They're backtracking here. You see, and so because of that, this entire week has been really hectic for the bulls. Remember what I said on Monday needs to happen quickly. Didn't happen on Monday. Didn't happen on Tuesday, didn't happen on Wednesday, didn't happen yesterday, and right now I'm not sure. I mean, looks like we're making some move as I record this video. Again, one day move does not make a trend. So right now, what bulls really need to do, if they really want to turn this into some sort of a trend, they really need to get above 441.95 and start cultivating. And one thing I kind of noticed, something that is not too bad right now, is that when we did see these tunas losing that footing, instead of coming all the way down to the lows, we're stopping short. Again, I'm not sure how it's going to close, but let's say if we close rather strong or positive note, that's not a bad level for that higher low, because we already have that subtle higher high. So what the bulls really need to get up here and get another higher high and higher low and start establishing that uptrend. So let's check out that oscillator real quick. So oscillator is pulling back, obviously, because of that footing that, tuna's not able to get that footing right and get that momentum going. So, also is pulling back. We talked about that, bears preparing again once this thing crossed, down here. So that tells us that momentum is down currently, but can this thing maybe cultivate a little higher low, higher high? Maybe. We don't know that yet. Again, just today's move alone is not going to really set the tone for that. Needs to see a follow through, at least today a positive move and another day of positive on Monday. So bulls still got a lot of work that needs to be done, and these tunas got to work harder here. Let's go to Spider. Now we're looking at the daily chart, as you can see here. So now we're going back all the way to, like you can see, June here of 2020, looking at the big picture. And so it's always a good thing that you want to understand the big picture. You want to understand the primary and the long term. Because if you're only focusing on the short term, if you're too intimate with these day-to-day fluctuations, market will make sure to get you out, to bully you around, and then it's going to go the opposite direction, and it's going to leave you behind. We want to make sure that doesn't happen. So understand the big picture, understand the overall trend. It helps you. You see that tankage right here. So that tankage, I really think market is trying to scare you out, especially if you're a long-term investor here, and that's kind of what's going on. But right now, what we have is we got that support or that pivot, going all the way to like October of, again, this is that pre-election week right here. So that's a pivotal level. And so that pivot coming all the way from here, all the way from there, where is my arrow? So you can see right there, and that's kind of where we're hitting, and also the rising support coming all the way from, what is that? All the way from June. So that's October and November pre-election week, and that's the June and like May in 2020 when everyone's talking about Great Depression 2.0. Yes, that was the days, right? Great Depression 2.0. And then that's where we're at. So you can see we got the pivot, you got the support, we got the, what do we have? We have the, Fibonacci, my Fibonacci first level. We're hitting that level also. And also you can see we got tiny gap area right there, and it came down close to that. And also my long-term, my primary long-term, the pink moving average. Do you see that pink moving average right here? Do you see this moving average coming down all the way from here, right? And that's kind of where we found really good support back in, you can see May and June, right? May, and you see pink moving. Do you see that pink moving average, right? It hasn't gotten retested, but we got pretty close earlier this week. So we're right in that vicinity. And so that's going to also, that level is going to provide. So you can see we got kind of like a triple, quadruple type of support. We got the pivot here, the purple dotted, and then blue dotted as a rising uptrend support. We got my fib there. We got some of the horizontal level there, right? Prior resistance, new support. And then we got that long-term moving average just guarding just underneath that area. And that long-term move, that pink moving average is definitely for the buyers. That's definitely for the bulls. And so it's just kind of hanging around there just in case, if they're, bears bring it down. I think that long-term moving average, you want to catch it and support the buyers. So we're just kind of watching it over there. So looking at things long term, in the short term and the midterm, obviously, the sentiment is bearish, right? But looking at things long term, can we all agree that we are in a long term uptrend? Like we see these kind of declines in an uptrend, right? And nobody knows. And I'm going to tell you right now, just because I drew a couple lines, we got the pivot and all that, doesn't mean like this is a level. It's gonna bottom. I don't know, man. I'm not God. I cannot see the future. Only thing what I can do when I reassess these situations and when I look at the levels, I always look at it as a potential level. But at the same time, I understand that this level could fail. But when you're dealing with the primary term, right? When you're dealing with the primary term that we're in this strong uptrend, we must understand and learn to respect the trend. And because most people didn't understand this for the last couple years, I was able to miss out this entire move. Remember, spiral trading at 220 in March lows, 480. Right? Think about all the things people are saying. Great Depression 2.0. Election is going to destroy the market. This market is overheated. There's no way it can go any higher. 2021, second wave. I mean, everything. And the market just kept going higher and higher and higher. And what it did, though, in the last couple of years, it kind of imputed this like complacency, like this market will never come down type of mindset. And then, starting 2021, it starts with this bang to the downside, because I think America needs to kind of shake some people out, especially if some people are chasing it up here, right? Missed out this entire move. And that's what the market does. You signed up for this. When you started trading in this market, this is part of the market. Market does this thing to scare you out, to give you fear and anxiety and misery. This is all part of it. You must be strong enough mentally, emotionally, right? While understanding the big picture, so that when we see the market shaking and baking like this, you're not going to be affected. You make right decisions. You look for opportunities. If you know where to look and go through, navigate through the up and down, that's a true investor, right? Let's go to cues here. So again, short to midterm, sentiment is bearish. Bulls need to do more. But long term, primary term to intermediate term, I want to give benefit of the doubt to the buyer. I hope you guys know what I mean by that, right? Bearish in the short term, bullish in the longer term, right? And that's how we have to track this market on a daily basis. Let's go to NASDAQ here. NASDAQ is a similar thing happening here. We got that pivot going, we got the support going here, support from here, here, and here, right? And also horizontal support pivot there. And you see there's that gap. You see that gap that's still open, right? You see a gap from right here. And that was when? June, early June. And so you can see that lower wick coming down. Bears are bringing it down earlier this week or late last week. And got close to that gap, coinciding with my 50% retracement, and bulls protected that level. Again, that's the level coinciding with my rising uptrend support there, right? Not a coincidence, right? Not a mistake, not a random occurrence. They were hanging around here, right? Hanging around here. And I want to be fair. I want to be fair that there are other levels. Yes, there are other levels that bears really brought at them, breaking through some of these previous levels, right? Previous supports. But what happened was it wasn't just like, oh, okay, the previous support did nothing then, okay? No, it slowed it down. That's why that's why, remember what I said, these gaps, there are more gaps here. These gaps gonna provide the cushion. So what it does is, as the market comes down fast, it gets to a certain level, and we don't know which level, but market decides which level. But as it comes down, it gets the stronger support because it's gonna kind of break through all the like lighter support, right? So now we're getting to that stronger support level because some of these are like little smaller gaps, and we didn't really have like uptrend in that vicinity. These are stronger. We got that horizontal here. We got that peak here, like prior peak, and that's the level. We got that support here. We got the gap area and remember we just talked about that long-term moving average, that pink guy right here, coming all the way down. So that guy is actually supporting right there, right? That's what you can see. Again, that's the level where we're seeing like the Fibonacci's colliding, rising uptrend supports are colliding, previous, peak, the, swing high pivot is colliding. You can see my long-term moving, you see that? It's just trying really, really hard, trying to scoop that up. So this was the level that is going to be acting. Market is starting to figure it out that this is a stronger support. And that's not what we're trying to do, man. We're not trying to I'm just going to draw a couple lines and I just know this is, nobody knows. Can this level break? Yes. But right now, bears been bringing it down pretty hard. And so, there gonna be some oversold bounce. Only thing we're trying to figure out is if that oversold bounce is going to be like little lower high before it becomes lower low and get into a downtrend, or is that going to be that higher low and higher high becoming that uptrend, right? That's what everybody's worrying about really, right? Because everybody's worrying about that. Can we continue with the primary term uptrend, or is this going to turn into some sort of like a downtrend that we could see declines for months ahead? First of all, nobody knows. Nobody knows. If anybody tells you they know, they don't know, because nobody can see the future. When somebody tells you they know, you run. I don't know. No one knows. So in this kind of situation, what we do is, we have to look at this market, in a probabilistic way, that what is a high likely scenario that this market could potentially do going forward, right? So that helps you. If you want to determine that, it helps you to understand the big picture. We will have severe corrections along the way, and that's COVID, that's 2019 right here, right? We'll have a corrections along the way, as you can see here, and you can see here. But when you're dealing with, man, a primary and macro uptrend, it has higher probability, especially when you see these fast, furious decline. It has higher probability that when the lows made, we don't know yet, right? Though it looks like it's really coiling up here, when the lows made, usually it has a higher probability that becomes that primary higher low before market makes its move to the upside. But sometimes market doesn't really have to go all the way back to make new all-time highs. Sometimes what the market does, especially if it's heated, it consolidates. You guys remember what happened on the Dow, on banks, small caps, and semiconductor last year after they got overheated? They kind of moved sideways. And that's what I call correcting through time. So what we could see is that maybe NASDAQ and the S&P 500 too kind of have a sideways move, right? And then while some of the weaker sectors to make a move, and as the sector rotation occurs, and sector rotation is always a good thing, because you don't want to see every single indices go up together, because if they all start coming down together, that's when there's going to be a big trouble. So what happens is a lot of times in a primary time uptrend, and this is a lot of people don't understand, what happens in a primary time uptrend, you will see certain sectors be much, much stronger than the other. And that's a good thing. So that when the market's trying to balance it out, the large indices can stay afloat. Problem always occurs when every sector, every indices, they all start to come down together. But let's say we got the small caps coming down this year pretty heavily. Let's say small caps coming down this year, but we got banks holding up, like Dow is holding up. You know what I mean? Like Spiders coming down 9%, Nasdaq's down 15% already, but we got some of these other sectors holding up, like energy is holding up, banks is holding up, Dow is holding up, right? Semiconductor holding up a little bit. So while one sector holds up, while all sector goes down, and then when they trade places, and that's how this over market stays afloat and stays in the primary term uptrend. And then at some point, when the balance is correctly done, they start to make a move again. That's what it does. So looking at the Spider and Qs overall, you know what I mean? Again, same assessment here. Short term, bearish. Short to mid-term bearish. But longer term, I want to give benefit of the doubt to the buyers. I can't help to think that this might be that trap. Everybody gets scared. We got the lower low here. People are exiting, maybe even shorting. And, market wants to get you out, get people out before potentially making its run to the upside. Let's go to gold. Here's the gold. I feel so bad. It's just life. This sometimes, you think you've been struggling for so long, right? I mean, this is the same with life. You think you've been struggling so long that you get a good break, but it doesn't come. What you have to understand is in the market, in life, rich gets richer and poor gets poorer. And that's true. And people who's been struggling, they struggle quite a while. It takes a while. And talking about poker, it's interesting because it's much, much easier to make more money when you actually start winning and you kind of have that momentum going for you. But once you're down, you could turn it around, but it's so much harder. So many people who loses, they tend to keep losing, right? People who wins, they tend to keep winning. I'm not saying everybody is like that, because I've seen people who, they're winning, but they're bleeding to death. If they don't know how to manage money and chips and getting into stupid things, right? So you look at gold, you're like, come on, you've been struggling for so long, definitely you could potentially make it out of here, but no, it's not doing that. But we talked about this last week, lower highs, higher lows. So yeah, I don't know. I mean, if this thing starts to do this, that's bad. It starts to do that, that's good. Obviously depending on your objective, right? So that's kind of what it is. I like to look at this as I like to look at it, because you know me, I'm a trend guy. I'm a long-term investor. I like to look at things in a big picture. I don't really care about the short term, you know. And I've seen these patterns. When these things coil like this, I want you to know that watch out. It's never going to be a perfect breakdown or never going to be a perfect breakout. More often than not, it's going to play a game. Play your mind. It looks like it's going to break down and then just go V-shape higher. You know what I'm saying? So those are actually more scary than if this thing start cultivating higher lows and higher highs, where it's going to trap a bunch of people and it just V-shape. How many times you've seen that? Looks like it's breaking down. Everybody's exiting. And out of nowhere, there's that gut punch. There's that ultimate F you, right? So because we are in an overall what? Uptrend. Now you're getting it. Let's go to Bitcoin right here. I'm going to end the video with this. What's happening? So Bitcoin is finding support right on that support line that I drew last week, but that gap just got filled. This gap right here, right? So I'm going to remove that. However, this gap is holding. See that? So what I'm going to do, and then the rising uptrend support, not a coincidence, not a mistake, not a random occurrence. So what I'm going to do, I'm going to put this right here, just letting us know that that's a level currently, right? I don't know if that's gonna be the level, like this thing, like doing this. That's a level for now until, you know what I mean, if bears start breaking down. There's another gap here. I think after that it's gonna get pretty hectic, because if we get any lower, this massive double top could actually play out. Something like that with the lower. We don't have any lower highs, it just came straight down. So we don't have any trends. It's a difficult market for Bitcoin when Bitcoin does this. That's why it's always difficult to chase at the top. It's better to go long when everybody's scared, and then when this thing gets too overheated, you start closing them out. But you're trying to like catch it up here, it's extremely difficult. You guys enjoy the remainder of this weekend. I'm gonna come back for you. We'll reassess the situation. Enjoy your evening. Good luck training next week.